Senior Moments, sponsored by the Empowering Seniors Group on News Talk KVNU, 102 FM and 610 AM.
Good morning and welcome to the Senior Moment Show. We're back again for another wonderful edition, we hope, of our show. My name is Bruce Lee. My co-host is Sid Roeder. Good morning, Sid.
Good morning, Bruce.
We're back.
We are.
And we're getting through the winter. We're into the first part of 2022. And do you know what that means?
Taxes.
Taxes. That's true. It does mean taxes. And that is everybody's favorite topic this time of year. Everybody's thinking about it. And because of that, we brought on Jared Ripplinger. He is a partner with Cook Martin Poulsen. Welcome, Jared.
Thank you. Happy to be here.
We're really glad to have you. We're going to talk about some things, hopefully, that will help people as they do a little planning in their lives to figure out the big tax monster. But before we do that, Sid, let's talk about our sponsor.
Absolutely. We are sponsored by the Empowering Seniors Group, which is a group of professionals that has dedicated their time and effort to provide information to seniors, their family members, and really anybody who cares. And we do so via this radio show. If you would like to learn more about the Empowering Seniors Group, you can do so online at empoweringseniors.info, or you can email us at empoweringseniorcv@gmail.com, and the CV stands for Cache Valley. And lastly, as always, Bruce likes to joke about this. If you have any suggestions for this show, any guests you would like to see us invite, you can call me personally at 435-512-6406.
Thank you, Sid. I'm not going to joke about that today. I will joke about
good.
CV, though, because that also stands for constant velocity if you have a CV joint in your car. But we'll just stick with Cache Valley. So please email us. Let us know what you think. We'd love to hear from you. Jared, partner with Cook Martin Poulsen and Tax Genius, right?
That's right.
Something like that. We're glad that you're here today. We thought that we would talk about a little tax planning, maybe some strategies for retirement, what's going on with the current tax law. But before we do that, why don't you tell us a little bit about yourself and how you became part of Cook Martin and why you want to be an accountant?
Okay. I've been practicing in public accounting for about 20 years now, and the last 10 plus years I've been at Cook Martin Poulsen. I enjoy helping people with their tax planning and strategies and appraising businesses and all that good stuff.
That's wonderful. So our tax season is up on us. Everybody that I know is already scrambling to get their stuff together. Is there anything that is new that we need to know?
Well, this is for the 2021 tax filing season that just opened on Monday, this past Monday. There aren't too many major changes from 2020 as far as taxes go. One of the differeces is that charitable deduction for people who aren't required to itemize, who are taking just the standard deduction. For married couples, it went from $300 to $600 in addition to the standard deduction. So that's a little bonus to a lot of people. For single tax filers, it's still $300.
Single tax filers not married, you mean?
Yeah, filing just single status.
That's our big bonus this year is we get $600 deduction for charitable. Is that like a DI donation? Is that what we're talking about?
No, it has to be a cash donation to a qualified charity to be eligible for the deduction.
Gotcha. Hey, let's talk about. We mentioned it at the beginning of the show. We want to talk about retirement planning too, and you and I were talking off air a little bit about as people are getting into that retirement window. There's probably some things they ought to start to think about, and we identified maybe as a 10-year out from retirement range as the place where maybe you ought to start thinking about some of these things. So as you meet with people that are in that time of life, how does that work? When you're hitting that 10-year window, what kinds of things should people start to think about?
Well, for most businesses, so if you're a business owner, Really, the sweet spot is that 5 to 10 years from retirement period. There's a lot of planning opportunities that can be implemented to either to maximize the value of your business for when you plan to transition that business, or to set up the business so that it's in a good position to be transitioned. And that can be anything from identifying who your successors are going to be in the business, whether you're selling to a family member, a business partner, employees, a competitor, or an investment group that is more hands-off. Depending on what your plans are on that side of things, that might dictate the direction that we go as far as the planning and setting up the structure of the business and getting it ready for the transition. But also with at least a 5-year time frame, we can help businesses to get everything in order so that the value of that business is maximized when it comes time for that transition event.
So can you be a little bit more specific on how you make that attractive to someone who might take that business over?
Well, in general, things that you can implement in the business, whether it's a process or a management team, to make that business run as well when you're absent as when you're there, those are enormous in the value of the business. So you want it to be as much of a plug and play, kind of automatically running business as possible. So when there is that transition, there's no hiccup, there's no difficulty in transitioning customers or producing or providing your services. It's just a smooth transition, and most people won't even notice any difference from one day to the next when there is that transition.
So as you're sitting with people, is that something that you just schedule and people come in and visit with you to talk through these things, or how does that work?
Yeah, it's usually a process. One of the first things to do typically is to determine what the value of the business is currently. Then we've got a baseline to work from, and that can also help us identify the areas of some weaknesses in the business that if we can help shore those up or reduce the risks, then that in and of itself will increase the value of a business.
Thank you, Jared. We're already up on our first break. Again, I want to mention our sponsor, the Empowering Seniors Group. If you'd like to find out more about the Empowering Seniors, you can do so online at empoweringseniors.info. This is the Senior Moments Show. We're going to take a little break. We'll be right back.
If you're retired or plan to retire soon, will you outlive your money or will your money outlive you? If you don't know the answer, I can help. Hi, I'm Patty Bartholomew, a financial consultant with Parsonex Securities. If you have questions about your financial plan or just need a second opinion, call me today at 435-227-5556.
Investments are not FDIC insured, nor are they deposits of or guaranteed by a bank or any other entity, so they may lose value. Investors should carefully consider the investment objectives, risks, charges, and expenses of the funds. This and other important information is contained in each fund's prospectus and summary prospectus, which can be obtained from a financial professional and should be read carefully before investing. Securities offered through Parsonex Securities, Inc., member FINRA, SIPC, 8310 South Valley Highway, Suite 110, Inglewood, Colorado, 80112-303-662-8700.
Whether you have a small business, large corporation, or sole proprietorship, remember Cook Martin Polson has provided quality accounting services since 1977. At Cook Martin Polson, they believe you've earned it, and they're going to help you keep it. Take a minute right now to call 750-5566. That's 750-5566 to set up your tax appointment and let Cook Martin Polson show you how to keep the money you have earned.
This is Jared Ripplinger with Cook Martin Polson. You've worked hard for your money. Let us help you keep it.
You have a lot of options when it comes to buying or selling a home. Do you list it online, sell it yourself, or do you have a realtor help? It's a major financial and emotional decision. A realtor is the liaison between buyers and sellers and really helps you navigate complex contracts, deadlines, and disclosures.
Hi, this is Sid Roeder with Achievement Realty.
I work for you to get the best outcome for your situation. Let me earn your trust with a free consultation and a free market analysis. Call me today at 512-6406. Then list it, sell it, and move on.
This is Mark Thurston from White Pine Funeral Services. On behalf of all of us here at White Pine, we want to thank the community of Cache Valley for your support this past year. Thank you for selecting us as a silver winner for the Best of Northern Utah. We look forward to many more years of working with you here in our community. We know you have a choice, and we hope you will consider White Pine Funeral Services. If you have questions about cremation, funerals, or planning ahead, please contact us or visit whitepinefunerals.com.
White Pine Funeral Services, here when you need us most.
Reed's Pharmacy in Hiram offers free delivery service 5 days a week, Monday through Friday throughout the valley. Just stay home and they will deliver to you. With 25 different suppliers, they won't have the shortage that others might have. Also, with compounding and many other services, they will be able to serve all your needs. In order to stay safe and help slow the spread, please call Reed's Pharmacy in Hiram at 245-DRUG, and they will take care of you.
Welcome back to the Senior Moment Show. This is Bruce, and my co-host is Sid. We have Jared Ripplinger with us today. If you're just joining us, he's a partner with Cook Martin Polson. They are an accounting firm here in Logan. As Jared mentioned at the beginning, he's been with them for about 20 years, right, Jared?
I've been in the profession for about 20 years, and with Cook Martin Polson a little over 10 years.
Okay, all right. And before we went to break, we were talking about, we were really kind of focusing on business owners and what kind of planning they should do as they're getting to that. They're thinking about, their 10 years off and how do they prepare their business to get ready to transition. What about people that aren't business owners that are getting ready to retire, just regular workers out there?
For someone who's not a business owner, we've got some key age points that present some different planning opportunities. And of course, it depends on how young you plan on retiring. But the first big age threshold is at age 59 and a half. Why that's key is because at that age, you can start taking distributions from your retirement accounts without any early withdrawal penalty. And there's some exceptions to earlier ages, but as a general rule, that age 59 and a half is a key point. The next age that is of significance is age 62, which is the earliest age to start collecting Social Security benefits. So that applies to the majority of workers out there. Those benefits can be delayed up to your full retirement age, which is going to be anywhere from age 65 to 67 under the current rules. And for each year that they're delayed after that, up to age 70, you can actually increase those benefits by 8% per year that they're delayed. And so that presents a lot of different planning opportunities. And in some cases, delaying the start date of Social Security benefits can also give some other retirement opportunities to position retirement accounts or other investments to minimize your taxes over that 10, 20, 30-year period that you're going to be retired. And then at age 70 and a half, we have another option that comes into play called a qualified charitable distribution. So anyone that has an individual retirement account, an IRA, that would like to not pick up some income but pay some amounts to charity and not have to worry about itemizing, they can pay directly from their retirement account, their IRA, directly to a qualified charity and get that deduction above the line. So that gives us some other planning opportunities. And then, of course, at age 72, pretty much everything retirement related has kicked in by that point. That's when the IRS requires minimum distributions from retirement accounts. But you're still also eligible for the charitable distributions. And if you're eligible for Social Security, you've already been collecting that for a time. So before each of those transition points, we can help from a tax standpoint to position things so that we can take the most advantage of the tax rules that apply at each of those ages.
So it sounds to me like a really good time to come sit down with you would be before I'm 59 and a half. And then what are some of the common mistakes you come across in personal planning?
A lot of the mistakes have to do more with timing of when different types of retirement sources of funds are utilized. So for example, if someone starts withdrawing their retirement account and starts taking Social Security at 62, they may be stacking up all of that income into one tax bracket, and so they could be surprised with a really big additional tax that year, and going forward. Whereas if things are managed over that 10-year period of time, that 8 to 10-year window from 62 to 72, we can work on the timing of when each of those retirement streams gets turned on, and therefore we can minimize the taxes over that period of time.
Do you see, obviously the tax law changes, there are changes to the tax law every year. Do you see things that might change strategy over time? So for example, a tax law that's favorable becomes unfavorable, then maybe becomes favorable again. Do you see those types of transitions to where people need to be ongoing in their planning?
Well, it's always a good idea to just kind of revisit any kind of plan that's related to your finances on at least an annual basis, if not more frequent, because there can be moving targets. Like you mentioned, tax laws change every year. Sometimes the changes don't affect most people. Sometimes they can be very broad-reaching. For the last 2 years, we didn't have required distributions from retirement accounts, but now that we're into 2022, those requirements have been turned back on, and so we've got people that are required to make their distributions. And there were some other sweeping changes to retirement accounts that were proposed last year, and so we were kind of watching the legislation as it was pending to see what was going to pass. For the most part, those provisions didn't end up passing, but it kind of gives you an idea of what Congress is thinking about and what might be in future legislation. So it gives us some opportunity or kind of an advance warning to pre-position to avoid some of the negative impacts that would come from some of those changes to retirement accounts.
Thank you, Jared. Let's not miss the opportunity if any of our listeners would be interested in talking to you either about retirement and business takeovers or their personal retirement. What's a good phone number to reach you?
The best number would be my office number, which is 435-750-5566. Again, that's 435-750-5566. Or anyone's welcome to email me. My work email is jripplinger, just the initial J, RIPPLINGER @cookmartin.com.
Thank you, Jared. We're up on our second break. Stay tuned. We'll be right back.
When it comes to successful aging, eating well matters. Staying physically active matters. Getting socially engaged matters. Living alone, aging alone, it's harder to consistently do that. Hi, this is Chris Grohl with Pioneer Valley Lodge, where we make it easier to do those things every day. Our mission at Pioneer Valley Lodge in North Logan is to help seniors live better, age more gracefully, and stay independent for as long as possible. Pioneer Valley Lodge, an independent living community for seniors.
Hi, this is Bruce with Comfort Care. One of the ways we help loved ones stay in their home is by assisting with daily tasks. These may include bathing, meal preparation, medication reminders, and housekeeping. We even help with shopping, transportation, and errands. Most of all, we offer a trusted level of care. Let us help you live your best life possible with Comfort Care. This is Bruce, and you can call me at 754-7676. Comfort Care, 754-7676.
Whether you have a small business, large corporation, or sole proprietorship, remember Cook Martin Polson has provided quality accounting services since 1977. At Cook Martin Polson, they believe you've earned it, and they're going to help you keep it. Take a minute right now to call 750-5566. That's 750-5566 to set up your tax appointment and let Cook Martin Polson show you how to keep the money you have earned.
This is Jared Ripplinger with Cook Martin Polson. You've worked hard for your money. Let us help you keep it.
Oh, it seems like yesterday I was playing with my kids on the playground.
Seems like yesterday I was building a treehouse in the backyard.
Time goes by too fast, but there is something you can do to ensure you're taken care of down the road. I'm Tracy Ferris with Quality First Insurance. A long-term care insurance policy is something we all need as we get older. If you wait until you need it, you're too late. Let me help you understand the options and benefits of long-term care insurance. Call me today, 435-752-0101.
This is Brian Erickson for the Sunshine Minute. Each day, our nurses, CNAs, cooks and servers, housekeepers, laundry staff, music, recreation therapy teams, office staff, receptionists, and many more arrive around the clock. These heroes show up ready and willing to serve and protect our residents and clients. We are so grateful to our dedicated team. On behalf of the Board of Sunshine Terrace Foundation and our community, thank you to all of our employees for keeping us safe. We bring more to life together.
Welcome back to the Senior Moment Show. We are discussing taxes today with Jared Ripplinger, who is a partner with Cook Martin Polson here in Cache Valley. And taxes are everybody's favorite subject, right, Sid?
My favorite.
You know, they
year.
become people's favorite subject if you're saving on taxes. Paying taxes, everybody's least favorite subject. So that's where Jared comes in to help out with things like that. And right before we went to break, we were talking about distributions from IRAs and strategies that way and some planning for retirement. I was thinking as you were talking, Jared, just from the standpoint that I think a big reason why people come to see somebody like you is they're looking for ways to save on their taxes and strategies to make sure that they can keep as much of their money as they can. I'm just wondering, as people are hitting that window of 59.5 on up to 70 or 72 you were talking about, that's kind of where I think 72 you said was required minimum distributions, and 59.5 is when you're able to take them if you want to. And so at that point, you probably have some people that want to take them and just pull that money out. And then you have some people that want to maybe keep it there and take money from other sources. And I don't know if they want to hand it off to their family at some point or keep it as an emergency fund. I'm just curious, are there strategies to help people manage their assets right there in that window so that they can, depending on what they're trying to do, keep more of it?
Yeah, there definitely are. Especially for someone who retires on the early end of the spectrum. So let's just say in this example that someone retires at age 59.5. So once they're retired, they don't have their W-2 wages coming in anymore. And so if they just left it at that, they might end up in a much lower tax bracket or in the bottom end of the tax bracket. And what we like to do for individuals who are recently retired or about to retire is see how much of that tax bracket is going to go to waste if they're in one of the lower tax brackets. So a pretty common tax bracket for a lot of retired individuals is the 12% tax bracket, which goes up to about $80,000 of taxable income. That's after your standard deduction. So really it's, for most individuals, you can make a little over $100,000 a year and still be in that tax bracket. So if your taxable income is just going to come in at $50,000 because you don't have your wages anymore, then we don't want to waste that low tax bracket. We want to take in some retirement income from one of the retirement accounts so you don't have that income later when you're also collecting Social Security and you've got more taxable income.
That would, even if you don't need it, right? You want to pull it so you can stick it someplace that's not going to get taxed.
Yeah, and there can be a couple of ways to do that. One is to actually withdraw it and then reinvest it in a non-qualified account, just a regular brokerage account. The other method is to convert part of your retirement account from being a taxable retirement account to being a Roth IRA. And with a Roth IRA, once you convert that, it's never going to be taxed again. So that can be a very efficient way to generate this pool of funds for a rainy day fund if you need to buy a new car, replace
as you
something
get older,
major.
You can do more too, right? Because the Roth limits increase as your age goes up, or is that just with the...
Well, on converting to a Roth, you don't have any kind of dollar limits currently. And so kind of the soft limit is that you don't want to go too crazy on that and end up in a higher tax bracket. But to the extent that you can convert some of those retirement funds to Roth funds in a Roth IRA, then you can build up this pool of non-taxable funds that can be used at retirement, or if you never need to touch those funds. Right now, Roth IRAs don't have required distributions, so that's a very attractive asset to leave to your heirs because it's an asset they can inherit, and when they withdraw the funds over 10 years, they don't have to pay any tax on those. And so that way you're using up some of your lower tax bracket to leave something to your heirs who may be in a higher tax bracket that they're not going to have to pay tax on. So it's a great way to go. Or, even if you're not leaving it for heirs, you can still have that as a fund where if you want to make a really large purchase, you can do that when you're retired without affecting your taxable income, because you can pull some of it out of your traditional retirement account, some of it out of your Roth IRA, and finding that happy balance where you're going to avoid kicking yourself into a higher tax bracket.
Thank you, Jared. I was going to pose the question at some point in time why someone needs an accountant, but I think with just that one elaborate answer, you've answered that already. Before we end our show, I'd like to give you one more chance to have our listeners know where they can find you and your phone number, please.
Okay, so again, my name is Jared Ripplinger, and my work number is 435-750-5566. My email is jripplinger, that's the letter J, RIPPLINGER @cookmartin.com.
Thank you, Jared. I think we learned a lot today. This is the Senior Moments Show. We hope you tune in again next week.